A very good morning, students. Hope you all are fine and good. So the chapter that we are going to see today is chapter 12, that is functions of commercial bank. See, before I just start with the class, can you think and tell me like what and all we have learnt about banks? Students, the last class was completely about the types of banks. So I think you all already know about the term bank, isn't it? So what we will do in bank, we will go to bank, we will deposit cash or we will withdraw it, we will just put for a different deposits. Yes, and not even that, so many other transactions are involved in banks. Let's see in this class now. Okay, so the functions of commercial bank. What is actually a commercial bank? Commercial means whenever the transaction takes place, when it is done for the purpose of a business, then it is called as a commercial activity. Okay, so they render many valuable services. The important functions of a commercial bank can be explained with the help of the following chart. What is that? See, when you just see about this, what are the valuable services that we have? When you just see about the importance of commercial bank, the first one is the primary function. Students, we have primary function, secondary function, okay, in this lesson. So now the first topic that we are going to see is primary function. The primary functions of a commercial bank are of three types, okay. So they are, the first one is accepting the deposits, next one is granting loans and advances, third one is creation of credit, okay. The first one, accepting deposits, it means the basic deposit accounts offered by the commercial banks are listed below. What are that? So in these days, banks compete with each other to attract customers by adding facilities to these deposit accounts. Broadly, deposit accounts can be classified into demand deposits and time deposits. So accepting the deposits, if you see, we have two different types of deposits, okay. The first one that we have is the demand deposit, and next one we have is the time deposits. We have so many subcategories in this, okay. So let's see with the explanation in this lesson, okay. The first topic that we are going to see in detail now, that is demand deposit, okay. What is demand deposits? Demand deposit means these deposits are repayable on demand on any day. This consists of saving deposits and current deposits. So when you want to deposit or when you just want to repay it at one particular interval, then on a demand or on a particular month, on a day, on a particular month like that, then it is called as demand deposit. This actually consists of, we have two different types. One is saving deposit we have, and the other one we have is a current deposit, okay. Saving deposits means what? General public deposits, they're saving into this account. This account can be opened in one individual's name or more than one name, okay. So saving deposit can be, for example, if I want to have a saving account, okay, what will I do? I will go and open an account. Like same way, if I want to have a saving deposit, I must go and give my individual name and then my details so that I can open a saving deposit, okay. It's nothing but saving account only. So what you will do for see, when you were small, what your mother will do, they'll give you one they'll just initiate the habit of saving, isn't it? They'll give you some penny, some rupees, and they will ask you to put it into your bank, piggy bank, isn't it? So what you will do, you will just put it into your small saving bank and you will save it for yourself. In future, whenever you need it, you will just break it and you will use it for your expenses, isn't it? Like same way, see, this account can be opened in one individual's name or more than one name. So section 25 of companies also can open savings account. Business firms are not permitted to open the saving account. Actually, when you see the business firms, it doesn't permit it, don't allow to open a new saving account and all. But the rate of interest allowed on this deposit is lower than the fixed deposit. But when you see, if you are an entrepreneur, you can only open say a current account. You can't open a saving account. If it is for a say some salary account, or if it is for your savings that you're opening an account, then that is a saving account. You understand the difference? So that is what is given here. When you are a businessman, you are not allowed to open a saving account. The rate of interest allowed on this deposit is lower than the fixed deposit. So when you open a saving account, the rate of interest will be very less. Okay, that is what. Interest is paid on the basis of the amount and number of days the amount remains credited in the account. So when is the interest paid? For example, you have some 10,000 rupees in your account. Okay, that amount you have it in your account only for 3 days. You won't get any interest. But there is a time duration. Maybe you have it for 1 month or 2 months or 3 months. Then you will get some interest towards that principal. You understand? So that amount you will get some interest and it will be credited onto your account. Okay. The bank provides facilities like checkbooks, ATM cards, etc. There is limit number of ATM card withdrawals from other bank ATMs only. So when you see, if you want to withdraw money from the ATM, say I have HDFC debit card, it means I can withdraw from the HDFC debit card. Through my card I can withdraw from my HDFC ATM for how many times I want. I can do it. There is no limit for me. Transaction limit is not there for me, where if I just exceed for 3 or 4 times also, my charges will not get deducted for me. But in case if I go to any other bank in spite of HDFC, I will be paid. You understand? I'll be asked to pay for some charges, bank charges towards using the ATM card. So there is a limit on number of ATM card withdrawals from other banks. Bank ATMs only. A minimum balance should be maintained in this deposit account, otherwise final interest is charged. Beyond a number, that is 20 or 60 leaves, that is checkbook is available for a fee. So that is if you don't have it, if you must have a minimum balance in your account. If you don't have your minimum balance in your account, then you will be charged for some penalty. Okay, and moreover, you will be getting a checkbook, and that checkbook will have only around 60 leaves, and more than that you cannot get. And in case if you need more than that, then you must pay some money to buy a new checkbook. So nomination, if you want, you can give any name. Salary account is a type of the saving account offered to salaried employees in which zero balance is permitted. Some banks offer overdraft facility. Yes, this I think you know. So if you want to open a salary account, it will be in a form of a saving account only. So in salary account, you don't have any limits and all. You can even open an account with zero balance also. And in few banks, they even allow for a overdraft also in a salary account. An account inactive for a long period will become dormant account. If you are not using any account for a very long time, and it will become a dormant account. Okay, that is what the expression that we have it for the saving deposits. The next one that we have is the current deposit. Okay. So this account is suitable for the business institutions. Individuals too can open this account. A higher minimum balance should be kept in this account. If not, a penal interest is charged. No interest is paid for the balance in this account. Some banks have started offering interest on these account balances. Banks may collect bank charges on this account. Overdraft facility is available to current account customers. There is no limitations on deposits of checks or withdrawals from this account. Credit worthiness of current account business customers are shared among banks. Okay, so what is this? See, very simple it is. I already explained about this current deposit. It is nothing but a current account. Okay, so if you are a business person or if you are an entrepreneur, it is always better to have a current account. You can't have a saving account. The reason is you will have a high volume transaction. Like same way, if you start to have a current account, you must have the minimum balance in a very high amount. Okay, it will not be a small amount and all. It will be a high amount value. So if you want how much times if you want to use your check, or if you want to have more transaction, you will be able to do it. You will not get charged for all that. Okay, and moreover, if you need overdraft also, it is also possible in a current account only. So that is why majority of the business people, they'll try to use this current account for their business. Okay, see in a business and all, if you just see in a business, so many times they'll be giving checks, so many transactions will come in and go, isn't it? For that reason only they need this current account. Okay, see time deposits. So the first category, what did we see? The first category we saw is what is the first one? Accepting deposits. Under accepting deposit, we saw the first category, demand deposits. Under demand deposits only, we completed the fixed deposit and the current account, the saving account and the current deposits we finished. So the next one is the time deposits. So under this, what is this? They include the fixed deposits and recurring deposits which are repayable after a period. It means what? So Under time deposit we have two types. One is fixed deposits also we will have. The other one we will have recurring deposits also. Students, we will learn about this in detail, okay? I will explain to you at that time. See, fixed deposits. Fixed deposits means certain amount is deposited for a fixed period for a fixed rate of interest. FDR is given to the depositor. Okay? So, the interest rate of interest is higher than the saving account. On the date of maturity, the principal along with the interest for the fixed deposit period is paid. A customer can obtain the loan by depositing FDR. Premature withdrawal of cash is also allowed for payment of penal charges and it carries on no interest. Okay? Partial withdrawal is also allowed. Fixed deposit period can be 1 month to 10 years. And fixed FD is also called as term deposits. Ma, what is term deposit, ma? It's nothing but the first one we have is the term deposit. It means maybe your parents want to save some money for you for your future, okay, in case. And they feel that they'll put some money for you say 5 years or 10 years or whatever it is, okay. This is actually available in post office also. We have an account in post office also. In that also you'll be able to do this fixed deposit and all. Okay, the interest will be deferred. Okay, but according to the bank terms, it will be deferred, and in the post office, it will be deferred. You must check with that. Okay, see, when you just do it in fixed deposit, you will fix one period for it, and you will just deposit some money, say some 1 lakh or 2 lakh or 5 lakh or whatever it is, say for 1 month or 10 months or maybe for 5 years or for 10 years or whatever it is. So, if you wish to do that, what will happen is, when you just deposit like this, after that, after 5 years, the same amount, say 5 lakh you deposit today, after 5 years when you get it, that 5 lakhs plus the interest amount, whatever it is there for 5 years, that also you will get together. So the interest rate will be much higher than the saving account, okay. It will not be more and all, but it will be more than the, it will be higher value, the money, the interest will be more than the saving account, and you will be getting both when your account gets matured. That is what. Next one is recurring deposit. This is totally different. Recurring deposit means you will be depositing some money. Say I am a salaried person, I want to save some money, okay, from my account I want to save some money. What will I do is, I will open an RD account. RD account is nothing but recurring account. What I will do, I will put some 5,000 for a month, okay. Today I am going to start with, on 5th, I will start with say some 5,000 if I deposit. What happens is, every month I will give an RD deposit for some 1 year. Automatically on 5th that 5,000 will get deducted from your account whenever your salary is getting credited. So that is actually RD account. So you can fix the duration for say 6 months or 12 months or whatever it is. So accordingly, after 12 months automatically that amount get matured and you will get some interest which is added to it, and you will be getting it. Say some 10 months you are going to pay some 5,000. So your amount will be how much? 50,000, yeah. How much? 10 months you are paying 5,000, that is for 10 months, it means you will get 50,000. So 50,000 plus they'll give you some 2,000 extra, it means 52,000 you will get by the end of the 10th month. You understand? That is actually recurring deposit. See here, certain sum is deposited into the account every month for 1 year or 5 years or the agreed period. Interest rate is more than the saving deposits and almost equal to the fixed deposits. At the end of the period, the deposited amount along with the interest are returned to the customer. Premature closing is allowed with the charges or reduction. It is ideal for the persons having regular income to save and receive a lump sum. Any institution can open a RD account. Minors to students also can open this account. Loan against this account is also provided by some banks. Yes, I think it is very clear, right? So what I have explained, that is there in your textbook. Know your customer, KYC norms. I think students, you are already, you know about all this. I think so. It is nothing but KYC is know your customer form. It means if you want to open an account, you must go to a bank. So there your basic details will be filled in a form, right? So that is called as a KYC form. If you want to open an account, they'll give you one form. You will fill all your basic details, you will attach your documents and all, and you will open a saving account. No, that form which you fill your details is called as a KYC form. It means know your customer, okay. And what are the proofs that is required to open a bank account, that everything is given here, you can read it, okay. See the next one. The first one we saw is accepting the deposits. The next category that we saw is granting the loans and advances. Now we are going to see the functions of commercial bank, the second category, that is granting the loans and advances. I will show you in your textbook. See, the first part which we saw was the primary function we saw is the accepting deposits. We completed fully now. Granting loans and advances we are going to see now. Okay. See, granting loans and advances. The second primary functions of a commercial bank is lending money in order to earn interest income. Okay. So what is the secondary function? So in a primary function, if you see, of a commercial bank is actually you lend some money in order to earn some interest. You want to get some interest as an income. For that you lend the money. Okay. So that is the that is a secondary function. Okay. Banks provide specific sums as loans which are repayable along with the interest, and demand loans should be repaid whenever demanded, and term loans can be repaid after the agreed period. Advances are credit facilities provided for a short term within a year to a business community, but both terms are used interchangeably. You understand what is this? You get loans and all, no? Your parents will get loans for some reason. That is actually called as loans. Loans and advances. Advances is nothing but if you are a businessman, you are having a regular business, okay, and you have a regular contact with the bank. Every day you do some transaction with the bank. In case if you don't get the money at right time, for that expenses for say some one amount to get transacted, that you will get some even money can even be as advance also. You can get the money from the bank. So some time duration will be given for you. So within that you must repay it to the bank again. Okay, that is advances. Okay. See, advances means overdraft. For example, I am a businessman. I need to give some 5,000 rupees to a person. Okay. I have only 2,000 in my account. When I send the check, my account balance is only 2,000. The balance 3,000 should be excess should be there. Then only I can pay that 5,000. What will the bank do? You are a current account holder, and they will check all your repetition. So for how many years you are there in that bank, you are a customer in the bank. You will see your loyalty and everything, and then they will give the overdraft. Overdraft means your account has only 2,000 rupees, but excess 3,000 rupees the bank itself will put and repay the check, close the check. That is called as overdraft. You understand? I will explain through you with the explanation. Okay. It is a credit facility extended mostly to the current account holding business community customers. It is an arrangement reached between the bankers and the credit-worthy customers. Such customers are allowed to overdraw when there is no balance money in the account. Up to a certain amount, usually for 3 months period, it may be extended for further periods. Only on the withdrawn shown amount of the credit interest is charged and not on the amount limit allowed. It is an unsecured credit, and secured overdraft against the security of financial instruments is also provided by some banks. It is repayable on demand. I think it's clear, right? See, when you just send one check when your account balance is very less, automatically that amount is taken as an advance by the bank, and they just pay the check. Later on you will be notified about that. Within some particular time you must pay the money back to the bank. That is what. See, cash credit. What is cash credit? It is a secured credit facility given mostly to the business institution. Stock in hand, raw materials, other tangible assets, etc. are provided as a collateral. So a certain sum is allowed as a credit for a short period, and interest is payable on the actual amount withdrawn and not on the entire credit facility. It is repayable on demand. I am running a business. Okay, suppose I run one business. Immediately some problem has arrived in my business where I am not able to get my money back. But I need to run my business. Yes. So what will I do at that time? I need some credit. If I go to a money lender, what will he do? He will charge me for more interest. I need to pay more interest to him. Yes. So what will I do is, I will take some document, maybe my RC book of my car or some assets, something which I have it for my business. I will just take that and I will just go to the bank and I will submit it and I will ask for some credit. That is called as a cash credit. You understand? See, stock in hand, raw material. Stock in hand means how much stock I have. Okay, that will be handed over to the bank and you will get some credit towards it. Okay, that is that is actually taken as a collateral. Collateral means security. Say if you want to take a loan for around 1 crore, okay, they will not easily, they will not assure they will check your credit worthiness and everything, and they will ask you for a collateral from some other person, maybe a known person or someone who has a property or someone. They must come and sign for a guarantee. That is called as collateral. So when they give a guarantee to you, what will happen? You will be able to buy the credit. So that is actually cash credit. Okay, that collateral is actually given, and a certain amount is also allowed as a credit, and it is only for a very short period. So after that particular period, you must be able to return back your amount. Okay, the interest that you get, that must be paid and on the actual amount which is withdrawn, and not on the entire credit facility. So interest whichever you are going to pay, it will be on the actual amount which you have taken and not on the full amount that you have taken for the credit. You understand? For example, I have already kept some security for say some 50,000, and I have got some 1 lakh from the bank. So I need to pay interest only for that 50,000 and not for the 1 lakh. You understand? When you go to a money lender, you must pay the whole amount. That is for 1 lakh you must pay, right? That is what is the benefit here. See here the next one, discounting of bills. What is discounting of bills? Business customers approach banks to discount the commercial bill of exchanges and provide money. It is a short-term credit instrument. Banks deduct the discount interest for the period mentioned in the bill and release the balance amount to the traders. If the bill is dishonored, the bank can recover the amount from the customer, and it is a form of unsecured credit. What is secured credit and unsecured? Secured means you are safe. Unsecured means where you are not safe. So why it is called as unsecured credit? See here, when you are a customer, you are running a business and you are a customer to a bank. Okay, at that time, okay, so you just get some discount, okay, on your draft. Bill of exchange is nothing but it is also called as a draft. You are doing international trade. You are doing it for say some from here, from India to say some Singapore or somewhere. You are doing some trade. Okay, you will get one bill of exchange, one draft you will get. So if you have that draft, it means that you will be able to get some money. It is actually worth that draft will have around some money. The value will be there, say some 5 lakh or something. Then it is actually considered as a short term only. See, if I am a trader, I have the trading for other countries. But right now, not only one transaction, I have so many drafts in my hand. I will not have one draft and all. I will have so many drafts. But this product is not required for me right now, but I am in need of money. What will I do? I will go, I will take the draft, I will go and give it to the bank, and I will get some money on behalf of that. So that is what is called as discounting of bills. I will give the draft to them. It is only for a very short time. You can just get the credit. Okay, and bank will give you, they will just deduct the discount. They will say you are not going to get any discount on the draft and all. You must deduct it, and then you must pay the money, and they will even pay the money, and they will release the amount whatever the trader requires for him. Okay, so that is what. If the bill is dishonored, then the bank can recover the amount from the customer. So in case if the bill is going to get dishonored, then he must get the money from the bank. Okay, so it is actually an unsecured credit. So the next subtopic that we have is the loans. Loans. Short-term and medium-term loans are provided by the commercial banks against eligible collateral to the business concerns. It is a definite sum of money lent for a definite period. It is repayable in one lump sum or in installments. Interest is payable on the entire loan amount, and every bank in these days design new methods of achieving loans to find more ways of earning income. Generally, commercial banks provide the following loans. What is that? So we have short-term loans, and we have another one is medium-term loans. So these both the banks are actually provided by the commercial banks, and is provided according to the eligible collateral, and which is given by the business concerns. And so it is actually one amount, a definite sum of money, which is actually one amount which is actually taken as a loan. Maybe if you want to get that loan in a full bulk amount and you want to just repay it in a month term, or on one particular installment you want to pay, or immediately you want to pay the whole amount, that is according to your wish. You can do it. You can do it in a one lump sum, or even you can make it in installments also. The interest is actually payable on the entire loan amount itself. And every bank in the days, and they are actually designed according to the new methods of advancing loans to find. Actually they are made for learning income. So generally if you see the commercial banks, actually they provide the different kinds of loan. What is that? The first one is housing loan. I think the name itself is very clear, right? Housing loan means what? In order to construct a building, you will be given a loan, okay? That is for house. So you have a land already, you go and give your land as a security, and you will just get some money on top of it. So that money will be taken, and you will construct a house. That is the housing loan. Taking the little deeds of the house as a collateral security based on the monthly income of the borrowing customer, banks advance the medium and long term loans. The customer repaid the loan in equated monthly installments. EMI consists of principals and interest, and this is a boon to the middle class salaried employees who cannot afford to pay the full price of a house in a lump sum. So when you're not able to buy a house for a lump sum, you just buy one land and keep, and with that slowly you start to construct. When you start to construct, the cost of construction will be very much more, and for that reason you just give your land document as a collateral and you just build a house. So that is actually called as a housing loan. So, okay. So what you will do, you will take it, your land will be kept as a collateral, that document will be kept as a collateral, and you will get more money so that you can start your construction. Okay. So slowly you will pay it in an installment amount. Consumer loan means what? For example, you are a salaried person, you want to get some loan for some reason. Maybe for their daughter marriage, or for some purchasing any land, or for some any other property, or for purchasing anything else. For that reason they will just make a loan. Maybe they will even take it for a child's education, or for some health issue, something like that. They just take one loan. Okay, so that consumer durables like refrigerator, air conditioners, then laptop, washing machine, televisions, etc. can be purchased by customers with the consumer loans from the bank. The loan which I told was about personal account. This is actually consumer loan is given here. Consumer loan means you can buy the loan for buying any electronic appliances and all. It is given here, see. So that is what the product purchase is hypothecated, and they must secure loan arrangements, and where the movable assets remains with the borrower as security for the consumer loan amount. The customer pays in equated monthly installment for a specified period. Say you are buying one washing machine, you pay some minimum deposit, and then you pay the balance money to the people, and that is actually a consumer loan. Okay. What is vehicle loan? So you purchase one vehicle and you want it for a loan. These all takes place with a middle class family. This consumer loan, vehicle loan, everything is actually taken by the middle class family only, because we don't have much money. So we will pay some installment initial amount, and then we will get it for pledging, and then you will pay the money on an installment and you repay the money back. That is what is the vehicle loan. See, two-wheelers, cars, buses and other vehicles can be purchased by individuals as well as institutions obtaining a vehicle loan from the bank. Vehicles are hypothecated to the bank until the entire amount paid is repaid. Vehicle registration book is deposited with the bank, and on a full payment of loan amount, it will be handed over to the customer. So once when you pay the full amount, it will be handed over to the customer. Educational loan. What is educational loan? Education loan means it is based on your education you get a loan. Okay. So for example, I completed my 12th standard, I want to do some medicine or something. Then in that case, what will they do? Engineering, medicine and all, it is like you have to pay lakhs and lakhs for it. So for that reason, you can just give your certificates, and you can just give your details, your bona fide, everything, where you are studying and everything, and then you will get a letter and so on. Some procedures are there for that, and then you will be able to apply for the education loan. So what they will do? So throughout your education, they will pay the money for you. The bank will pay the money for you, and after completing the education, you must repay the money back. you'll be paying it with the interest. So after completing your education, you get one job and you repay the money back whatever you got as a loan. Okay, that loan amount, the principal plus the interest you will pay. Okay, see here, the loan is provided by the bank to the students for studying undergraduate, postgraduate or professional courses, and loan may be received in installments to pay the educational fees every year. After completion of the course, 1 year is allowed for the students to get employed, and afterwards the student should repay the loan with interest for the entire period, and interest is charged from the date of the first installment of the loan amount payment. So you must pay the full amount whatever it is paid, and that you must pay it fully. Okay, that is one. Education loan. Next one is jewel loan. What is jewel loan? Jewel loan means you get some you just mortgage, you just give your jewel and you get some money from that. That is jewel loan. You pledge your gold. Okay, customers pledge their gold jewels and obtain loans from the banks. The margin requirement is fixed by the RBI, and interest should be paid every month. Otherwise, interest on interest is charged, and within 12 months the customer can redeem or else can repledge. The jewels not redeemed even after remainders are sold in auctions by the banks to recover their dues. You understand? So they'll be given some 1 year of time, so you must pay your interest and all. If you don't pay your interest for your jewel, then you need to pay double interest for that, and after one particular time when you will be notified for getting back your jewel, and still if you don't respond to it, then you must your gold will be sold for auction by the bank. Okay, and then they will take their money back. That is okay. And the last the type that we have is a creation of credit. We are just seeing the primary functions of a commercial bank. So in the primary functions only we completed the 2 topics now, that is accepting deposits we finished. Okay, and then we just saw the creating the loans and payment, that all advances also we finished. So next one is creation of credit. By the so creation of credit means what? So apart from the currency money issued by the RBI, the credit money circulation created by the commercial banks influence the economical activity of a country to a large extent. Credit money of a commercial banks is far greater in volume than the currency money. The volume, the purposes and the sector to which this credit money is to be channelized, all these are implemented by commercial banks under the guidance of the RBI. What is the creation of credit? Apart from the currency, whatever the money is issued by the RBI, the credit money in circulation, it is also created by the commercial bank also for some development, economical development also. That is actually done by the RBI. Okay, so the credit money of the commercial bank, actually it will be like a very huge amount, and it will be in a currency value also, the value of the currency value. Okay, it will be in a huge amount, it will be in a currency money. The volume, the purpose and the sector to which this credit money is to be channelized, all these are implemented by the commercial banks and the guidance of RBI. So where they must take this money and what they must do, that everything is actually fixed by the RBI only. Okay, so that is the creation of credit. This will be done actually mostly for the government only. Okay, so this is the third type that we have seen. So next one is secondary function. So we will see the secondary function in the next video. Okay, so I'll stop here. Students, please read line by line, and if you have doubts you can come back for the live session. Okay, hope you all are safe and fine. Thank you, students.